Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk to you. A real interesting day because we're speaking in the afternoon and the presidential election in the United States will be in the evening.
And how do you trade when you're in the middle of an election day?
Well, we've seen, or I've seen at least, a lot of talk in the past few weeks of suggestions that the stock market could crash after the election. There's been a danger that there could be turmoil in the United States over a dispute over who the winner is. And the odds are we probably won't know who the real winner is tonight because so many states are going to have to count these ballots that were mailed in the mail. Pennsylvania says they won't know the answer till perhaps Thursday or Friday. But if a specific state or two flips one way or the other, tonight, then we'll know one person has won. But who knows? I'm not trying to predict it. I don't think the market is going to crash, even if there is a dispute or even turmoil. And I think these things are probably exaggerated. However, there's a good possibility that we could see volatility overnight or for a day as a result of the election that would just be temporary. For example, when the Brexit vote happened a couple years ago, the markets all over the world gapped down hard the next day and then rallied back up. When Trump won overnight, the Dow futures were down 1,000 points at one point. Gold also took a plunge that evening. But then when the market opened up, the U.S. stock market began a rally that lasted until the end of January. It was a real powerful rally, in fact. So that volatility was a buying opportunity. And my feeling is that if something similar were to happen in reaction to the election results or what we have of them tonight, that it would be a buying opportunity at some point, probably the next day. So what I have done personally, is rebalance my accounts. I had positions, some that I was up a lot of money on, and I wanted to have a little bit of cash to use in case the market were to gap down. And that's something I do periodically with my accounts anyway. A lot of people in the United States are told to have, let's say, half their money in bonds and half their money in stocks and rebalance. So if the stocks go down and the bonds go up, you sell some bonds to buy the stocks, get back to 50-50. I'm not doing exactly that because I think bonds aren't a good investment anymore when they yield absolutely nothing and don't really have great upside. In fact, since the stock market pulled back on after Labor Day, Treasury bonds have pulled back too, to show that they're no longer really acting as a great safe haven. So I think what people need to look for isn't a crash, but perhaps the start of the next rally in the markets after the election. It could be it's starting today because the S&P 500, as we're speaking, is up 60 points. Gold is up too. The GDX ETF is trading at 39.48. And if you draw a trend line connecting the high of August in September and October, you have a resistance level of 40. And the GDX, that's the gold stock ETF, and gold itself have been consolidating really since the start of August. And when that consolidation ends, I expect they're going to begin to rally into the end of the year, and we're on the verge of breaking through resistance. Some stocks have already done it. And I think no matter who wins, it's going to be gold and the mining stocks that outperform the S&P 500 because they've been doing that year to date. As of this weekend's close, the S&P 500 was down about 1.5% for the year, and the GDX gold stock ETF was up 28%. So to beat the market, you want to be in what's beating the market. It's gold in the mining stocks, even though the consolidation that's taken place since August has made a lot of people take their eye off of them.
We'll have more with Mike Swanson right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Welcome back. We're speaking with Mike Swanson. Mike, is there going to be any life in crude going into Christmas?
Well, I'm not sure. And the reason why is in comparison with gold and the mining stocks, last week, the stock market continued to act weak, but they actually went up on Friday. The Dow was down pretty good that day. And today, the stock market's up, gold is up, and energy stocks are down. Energy stocks have been lagging the S&P 500 all year. The XLE is trading around, the XLE ETF is trading right under 30, and its high was right above 45 in June. So it's tough, and that doesn't mean they're going to decline forever. In fact, in a commodity bull cycle, and I think we started one, what tends to happen is gold and silver go up first, and then agriculture commodities go up, and we saw that happen or start in August. The RGA ETF and DBA ETF, which are the most popular ETFs to track agriculture commodities, I own the DBA ETF too. They rallied through their 200-day moving averages in August and still are above them. So they look very bullish. And if DBA can get above 15, and it's at 1460 right now, it would do something it hasn't done in 9 years. That's make a higher high. With oil and energy stocks, we can't say that. They're still below their 150-day and 200-day moving averages. And in a commodity bull market cycle, typically they go up last. So that's what I'm looking for. Not for them to start a bull market this year, but perhaps next year. And start at some point, and it could be now, to bottom out and go sideways. I don't think they're going to make new lows to go below where they were in March, but a stock like Exxon, which is trading at 33, it can get down to 30, perhaps by the end of the year, and make a good bottom. Or maybe it doesn't. It just, trades in a range, between 35 and 32 or something. But I need to see these things. Basically, they need to go sideways a bit more and then turn up. And I'm hopeful they'll do that. And that would be a constructive sign that they're starting a bottoming process and could become bullish next year, but it's still early. The one good thing about it, I'll say, is that if you compare, I just saw this, which is real interesting. If you compare the energy sector to the S&P 500, it's at the lowest relative strength point in its entire history, or at least going back to the 30s. So that's a suggestion that there is deep value there. And the agriculture sector reached the same point in comparison to the U.S. dollar, the lowest valuation in U.S. dollar terms in over 100 years. So there's deep value here, something you don't see in things like Tesla and Apple and Amazon that so many people are focused on, at least in the United States.
We'll have more with Mike Swanson when we return.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, what's going on with copper?
Well, copper has been looking constructive. It's at $3.10. And it got down to $2.10. I believe, typically what happens is when gold and silver go up, which they've done, the other metals such as copper, they may lag at first, which copper is still doing, but they start to perk up, and some of the top copper stocks are doing very well. Rio Tinto, for example, it made a new high around Labor Day, and it was around 65, now it's 58 or 59. So it pays a good dividend. So the copper stocks, they're kind of trading in line with the mining stocks, even though the price of copper might be lagging gold a little bit for now. But that's kind of the story for almost all the metals. Maybe the sector that's performing the worst when it comes to mining stocks is uranium. Cameco, the biggest uranium miner, hasn't really taken off. The high set in August is 12 and it's below 10, but I would suggest that's because uranium is tied into the energy sector too, and it's probably going to take the energy stocks taking off before it really gets crazy.
Are there any so-called safe havens right now?
Well, that's the big problem in the financial markets that all investors now face, and that is that the traditional safe haven is the U.S. bond market, and it went down with the stock market in September and October, and that's not good. That's a giant problem. So you're then faced with alternatives, and gold and silver are alternatives, and I think are acting as safe havens. But the difficulty in throwing, let's say, half your money into just them, if you want to use them as a safe haven in your a regular investing account, is they do have volatility to them. Not as big as the stock market, but we saw in March when the S&P 500 fell over 33%. The price of gold fell about 10%. It's less volatile than the stock market. It now seems to go up better than the stock market. But still, a 10% downside risk on what you think of as your safe haven part of your portfolio, that's much different than what people have been used to in the bond market. Bonds haven't until recently gone down with the stock market. So that's a challenge. And what I've tried to do to overcome it, because I don't want 10% volatility in half my account that's the safe haven. Some people can deal with that with no problem. It just depends on how cautious you want to be, but I don't. So what I have done is bought, along with gold and silver, some foreign currencies that are not, that are not historically that volatile. So I've got some cash in the U.S. dollar that I don't really like to have, but the idea is if the market pulls back, I could use it to buy. But over the past couple months, I've also bought euros and yen and Swiss francs. And historically, the Swiss franc is the least volatile currency in the entire world, going back since 1900. And when the U.S. dollar goes down, it tends to go up. And so that's something I've been using in my account, diversifying in some foreign currencies with a weighting to the Swiss franc. And I think this is something I'll probably be doing for 5 to 10 years from now, because the difficulty is that the bond market just has no value in it, and it is risk. I mean, you can buy a 90-day bond or 90-day CD or a 30-day one. You don't make anything. But if it's just a short-term bond, you're not really going to lose anything. But lock your money up for 3, 5, 10 years, and I think you're almost guaranteed to lose value on that money because inflation is going to be higher than what you get on those bonds. And if you think you're going to sell them, they'll go down in value when inflation does come. That's just, it's almost the most risky investment I think you can make, because while you're basically taking risk to make nothing, and it just doesn't make any sense.
What's going on with Bitcoin?
I don't know. It's gone back up. It crashed when the NASDAQ crashed in March, and historically it's traded with the stock market. You can use a correlation indicator to track how closely something trades with something else, and what Bitcoin has the closest correlation to is the NASDAQ. People who promote Bitcoin as an investment, they make the claim it's a safe haven, that it can go up when the stock market goes down. It's never done that. In fact, when the stock market pulled back about 20% in October 2018, Bitcoin crashed then, also. And it had big pullbacks in 2015 when the stock market pulled back and fell 20% too. So to me, Bitcoin is just a more volatile stock. That's what I think of it. Like, if someone wants to invest in, let's say, Tesla has gone up more than the stock market when it goes up, but it can crash too. And to me, that's how Bitcoin behaves. It's not a safe haven. There's no negative correlation with it to the U.S. dollar either. So to me, it's like something very speculative. And I'm not interested in it. It doesn't pay a dividend. I just don't really care for it myself as an investment. But it has gone back up to 13,000. So to me, the reason it's done that is that people are just speculating in the markets, and we've had a great rally in the U.S. stock market into Labor Day at least, and Tesla benefited from it. We saw a flood of millions of people opening up Robinhood accounts and small traders getting in the market for the first time, and this has all benefited Bitcoin. But I've seen absolutely no evidence that there's like institutional or big money going into it thinking that it's going to replace money or anything like that. But as long as the stock market, let's say, trades above its 200-day moving average, I guess Bitcoin can float around too, and, you know, getting above 13,000, that's more than I thought it would do. Got back up to 10 and started to look weak. Now it's at 13, but if, you know, maybe it can go to 20 again. I don't know. But there's better Bitcoin, traders and timers than I am. And I tend to buy things that I believe in. You know, that I want a stock that pays a dividend or has earnings that can grow, and Bitcoin doesn't. And I like to buy gold and silver because they're real things that from human history have acted as safe havens, whereas Bitcoin is so far only traded as a more volatile version of the NASDAQ.
What's going on with the Robin Hooders?
Well, we saw a shift with them. I'll load it up and tell you exactly what the most popular stocks on there are. But in March, when the stock market crashed, there was a flood of these people opening up new accounts. And the stocks they bought were Tesla was number one, Apple, stocks like that. But then they also were buying things that had crashed a whole lot in March and then had big rallies off of a bottom, such as American Airlines, Delta, Carnival, Norwegian Cruise Line, stocks like that. And oddly enough, these stocks are still among the top 50 that they own. So that's what they're doing. In a way, the same stocks that they jumped in to start with are the same ones that they're still heavily invested in right now. So I haven't seen any real meaningful changes in the past couple of weeks with what they're doing. I would note that there isn't a single gold stock or gold ETF in their 100 most owned positions, most popular positions. So I think that's bullish for gold, and indication that in the United States, at least, small investors have not gotten in at all. And one interesting thing about that is in the past couple of years, the cannabis stocks were something that were in this top 100 list. Aurora Cannabis, Canopy Growth, and I think the retail traders really drove a lot of the speculation in the cannabis sector. So they haven't even gotten into the gold stuff yet, or silver.
Mike, thank you so much for chatting with us.
Thank you. Great to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.